Welcome back to our channel, where we analyze and break down current events and its potential impact in the near future in a thought-provoking way. Today, we will be breaking down a topic that's been making headlines in the internet: CBDCs, or Central Bank Digital Currencies. So, what exactly are CBDCs, and how will they impact our future? Stay tuned as we delve into the world of CBDCs and explore the impact this emerging technology can bring to our lives. Subscribe and hit the like button to support our channel. CBDC stands for Central Bank Digital Currency, and it is essentially a digital form of money that is backed by a central bank. Unlike cryptocurrencies, which can be decentralized and not backed by any central authority, CBDCs are issued and regulated by a country's central bank. CBDCs are digital versions of traditional fiat currency, like dollars or euros, that can be used for transactions just like physical money. According to official statements, CBDCs will allegedly provide a more efficient and secure means of payment, but implementing this technology will have a big impact on the way we conduct financial transactions, and also for our privacy. CBDCs, blockchains, and cryptocurrencies are all related to digital currencies, but they have some key differences that is worth to analyze. CBDCs are issued and regulated by central banks, while cryptocurrencies can be decentralized and not backed by any central authority. CBDCs are designed to be used as legal tender and to replace physical cash, while cryptocurrencies are primarily used as a medium of exchange or investment. CBDCs are typically centralized and operate on a permissioned blockchain, meaning that they are only accessible to authorized users and organizations. In contrast, cryptocurrencies are decentralized and operate on a permissionless blockchain, meaning that anyone can participate in the network. CBDCs can be used to facilitate financial transactions within a country, while cryptocurrencies can be used for cross-border transactions and in some cases as a store of value. CBDCs are typically pegged to a country's fiat currency, meaning that their value is backed by the government's guarantee, while cryptocurrencies have a volatile value that is determined by market demand and supply. While CBDCs, blockchain, and cryptocurrencies all share some similarities, they all have distinct differences in their purpose, design, and regulatory framework. This wouldn't be an honest video if we didn't discuss the alleged benefits of CBDC technology. Faster and more efficient transactions. CBDCs could facilitate faster and more efficient transactions, as they can be transferred instantly and without the need for a third party. Increased financial inclusion. CBDCs could help to increase financial inclusion, as they can be easily accessed by anyone with a smartphone or internet connection, regardless of whether they have a bank account. Improve transparency. CBDCs could improve transparency in financial transactions, as they can be easily tracked and monitored by central banks, potentially reducing the risk of fraud and money laundering. Reduce transaction cost. CBDCs could also help to reduce transaction cost, as they can eliminate the need for intermediaries such as banks or payment processors. The introduction of CBDCs raises concerns around privacy, surveillance, and government overreach. For example, the use of CBDCs could make it easier for the government agencies to track and monitor individuals' financial transactions, which could be viewed as a violation of privacy. And here we break down a few concerns regarding CBDC technology. Security risks. CBDCs are digital currencies, which means they are susceptible to cyber attacks and hacking attempts. This could potentially result in the loss of funds and pose a risk to financial stability. Privacy concerns. CBDCs could potentially compromise privacy, as all transactions will be recorded and monitored by central banks. This could raise concerns about government surveillance and intrusion into individual financial activity. Systemic risks. CBDCs could also pose systemic risks to the financial system, as they could potentially destabilize the banking sector if people start withdrawing funds from banks to hold CBDCs. Technological barriers. Implementing a CBDC system will require significant investment in technology and infrastructure, and may pose challenges for countries with less developed technological capabilities. Disruptive effects. CBDCs could also have disruptive effects on existing financial systems and business models, potentially impacting banks and other financial institutions. CBDCs can be programmable. The specific features of CBDCs can vary depending on the design and implementation chosen by the central bank. CBDCs can be designed with expiration dates and spending limits. Spending limits could be put in place to prevent individuals or entities from spending beyond a certain amount. Using a digital wallet is one option for accessing and using a CBDC. Digital wallets are software applications that allow users to store, send, and receive digital assets, including cryptocurrencies and CBDCs. Users could access their CBDCs through a digital wallet provided by the central bank or a third-party provider, which could be linked to a bank account or other financial instrument. Nigeria's CBDC problem. Africa's most populous country, Nigeria, is witnessing massive protest after the implementation of their CBDC, the e-Naira. The demonetization policy in Nigeria, aimed at promoting a cashless society, has resulted in a shortage of cash, causing widespread protest with people attacking banks and ATMs due to the lack of access to cash. The decision to demonetize the currency has been made in a country where 40% of the population doesn't have a bank account, which has aggravated the cash shortage problem. Bank branches in Nigeria have been accused of hoarding cash, exacerbating the shortage of cash among those who need it the most on a daily basis. The FedNow program. In the US, the Federal Reserve program, FedNow, could be a potential testing ground for the rollout of CBDC. According to official sources, this program is set to start functioning by July 2023. Some US governors and senators are proposing legislation against CBDC technology due to privacy concerns and potential government overreach. According to the Atlantic Council, more than 100 countries are currently experimenting with CBDC technology. Is it the goal to create a cashless Orwellian society of the likes of 1984, where Big Brother can see all your moves? CBDCs can be programmed, tracked, and monitored, giving central banks unlimited power over the population. Do the alleged benefits of CBDC outweigh the privacy and security concerns associated to this technology? Let us know in the comment section below, and thank you for watching.